So today's topic is how to deduct $69,000 in 2024 without looking for receipt. Well, that's attractive, right? That is something everybody wants to know. So before we do that, before we give you the secret sauce, and we want you to see our website, communitycpa.com, that is where we conduct our business. You're probably wondering, oh, Ying, I see you guys on internet. Are you on internet a lot, or how much of your business is local, how much of your business is remote? I'll say that remote side of business, which means that we don't have a branch, but clients are coming from different states. That part of the business is growing rapidly, and because of our internet presence. A lot of you follow me and for years and years, and you know me so well, but you are not yet made decision to come to our firm to be our client. Today is the day you should do that. Become our client. And today, I am going to draw up the chart for you. I just have a couple of slides because we only have 30 minutes here. So I want to quickly go through and draw you the chart, really honing home for you how you can deduct $69,000. All right, so let's go in for our next slide. This is our firm. We always give you an introduction of our firm, not wasting of your time. Just want to give you that impression one more time. Why don't you come to Community CPA to become our client? We speak collectively 10 different languages. Tell me what language you speak. Tell me that you couldn't find a professional that speaks your language, and I don't think that ever exists. You will find someone who can communicate with you. That's how we are. And of course, we have more than 12,000 clients. And I know my slide shows you 10. We're being conservative in that way. And our branches, and we just established Houston branch in Texas this June of 2024. Now, if you go to 4740 Ingersoll Street in Houston, Texas, you'll find our building. And we are there, and we have now, 5 different branches. So I myself, I'm the CEO and a managing partner for Community CPA, and I care about learning. And I served on the Federal Advisory Committee to provide advice to IRS for 3 years. So that's kind of my credential, right? So if you ask me, hey, Ying, what did you do? And I can brag about it. I also wrote 2 books so far. I'm writing the 3rd one. And my 2 books, I do know people who had read my books from first page to the end pages, not 1, not 2, not a dozen, many of them. I even had a lady in her early 50s, and she came to me. She said that, I have my bachelor degree, but I will tell you a truth that I have never read a book from first page to the last page. And your 8 a.m. is the one I read through. I cannot believe I did that. I'm proud of myself, but on the other hand, your book is very drawing. You just suck me in, so that way I couldn't get out. I just have to read it. So give that kind of comments to my book and make my heart warm. I know that I wrote something people need to know. If you start up a business or you want to grow your business, you are looking at 8 a.m. and 10 a.m. Those are the 2 books. Teaches you, show you how other people are doing business and growing their business. All right, no responsibility disclaimer, you know what I mean. So now, let's talk about the plan. The reason I bring up these retirement plan, because that is weird that $69,000 existed. You don't need a receipt. You just need to be proactively set it up. There are, our firm serves small, medium-sized businesses, right? So there's other plans like 403B and all of these kind of different acronyms, and you can find them. But I am talking about the most popular plans that are used by small, medium-sized businesses. So if you don't have one, and business owners, and you are my client, look no further. These 3 are the one you should do and can do and easily be done. All right? So 401k plan, you heard that a lot. There's a lot of 401k. They give different names, 401k, solo plan, 401k profit sharing, All of that is originated from 401k. So 401k, the characteristic for 401k is that you have the highest contribution limit among all the other plans. So if you really are in the situation where you end up with a big profit, you pay a lot of taxes every year, and you felt like, can I save taxes? Can I move away $69,000 for myself without paying taxes? You have the answer. The answer is yes, you can do that. So look at that. For contribution, employee can contribute up to $23,000 if you are 50 years or younger. But if you are older, the government knows that your time is up. I'm just kidding. Nowadays there's the highest age is 117 years old. So who talk about 50? 50, you're young. But when you are in the 50, and you can contribute $30,500. So let me show you what I mean by contribution for $23,000 or $30,500 as a 50 years and older. This is not something like a donation. It's called contribution, just means that you can put that money in your 401k account. It's yours. It's not anybody else's. It is your money you put from the right pocket to the left pocket. That's what you are doing. But the nature of these pockets are different. Your right pocket, everything in there, you pay taxes. But your left pocket, you don't pay taxes until you really dive into it, using it, right? So that's the difference. So you move money from yourself to yourself, but the nature of taxes is different. Advantage is that it's a high contribution limit. And also, it's tax deductions for employer and the potential tax credit for starting the plan. So there is a $5,000 cost you spend to start up the plan. You can deduct that. And there is a tax credit program for you. And also the employer, which is your own business, and you set up this plan, and you can deduct that. You can deduct that as your expense. So those are benefits we're talking about. Simple IRA. That's a saving incentive match plan for employees. So contribution-wise, employee can contribute up to $16,000. If you're 50 years older, it's $19,500. You can see right here that it's less, right? Yes, it is less. And the employers must match contribution or make a non-elective contribution. Non-elective just means that, English is not my first language. It's my second language. So when I see words like non-elective, I somehow know that a lot of folks don't know what that means. Non-elective, it just means that you have no choice. Elective is like choice, right? Non-elective just means no choice. What does no choice mean? So no choice means that employer pays to the employee account, regardless employee contribute anything to the retirement or not. Have you heard of people say, my employer matches 3%? What does that mean? That means you put in 3%, your employer gave you 3%, right? So that actually is not non-elective contribution. Non-elective contribution means that even if you don't put in the 3%, the employer has to give that to you for 3% or more. Advantage for simple IRA is easy to set up and immediate vesting for employees. So even if you work for your employer for, let's say, 5 months, but you got non-elective contribution already, you take it home. So that's yours. The lower administrative cost is a big deal. Yes, 401k is more expensive and the simple IRA absolutely less expensive, right? But again, when we talk about expensive or less expensive, what if I say I save you close to $12,000 on tax bills and you spend $2,000 on cost? So what? I think it's still a good deal, right? SEP IRA, simplified employee pension. Contribution side, it says employer can contribute up to 25% of each employee's compensation with a maximum of $69,000 in 2024. That is my $69,000. But in this case, if you do this SEP IRA plan and you are the only employee in the company, you can do 25% of whatever you make and up to $69,000 and as a contribution to the retirement. Okay, simple to administrate, flexible in contribution amount, and the contribution can be tax deductible. So this is most popular plans, folks. If you have to think of setting up some plans for your small business and you're the only employee or you just have 2 other employees and maybe they're all part-time so they're not even eligible. So just consult with your CPA, consult with community CPA. So we can tell you what is the best plan for you based on the income structure, based on the income you're getting and based on your income structure, the tax structure that you have. All right, so now let me zoom into 401k because that is the one I want to allure you into the $69,000 understanding. So 401k plan, a 401k plan is a retirement saving plan, right? Offered by many, many employers in our country. It allows the employee to save and invest a portion of their paycheck before taxes taking out. Many employers offers a matching contribution, which is free money added to your retirement saving. Employee contribute $23,000, up to $23,000, actually up to $30,500. I didn't change that. It's up to $30,500 in 2024. All right, so that is the employee contribution. Catch-up contribution is $7,500. So total contribution limit is either $69,000 or $76,500. Now, I'm going to use my drawing board to show you how to drive yourself into $69,000, how that works with your W-2 as a business owner. So I just want to give you that visual so you actually know that, tax planning time is here. And I really want to take this advantage and put away $69,000 or put away $76,500 for my future spending, right? For your retirement. Remember, that's $69,000. That's $76,500 for someone that's 50 years older and older. These are tax-free, income tax-free. And our income tax rate is 37%. If you are a successful small business owner, you're probably paying 37% right now. But if you took away that $69,000 from your income, and even if you're paying for 10% on income tax, you're saving what? You're saving $6,900, right? So ladies and gentlemen, it's not a small saving. It is a chunk. But this chunk comes in with a good understanding of your payroll and a good understanding of how to calculate that. Let's get going. Now, let's look at my drawing board. I'll be drawing that to you. So we just said that, because of our limitation is on age. Remember, like if you are less than 50 years old, and then you could be older than 50 years old. All right. So these are 2 large groups. So remember, we said about the personal deferral. What was that? Is that 23,000? We're talking about 2024, okay, folks? Because that deferral amount always changes, or raised a little bit every year. So, but when you are over 50, they don't ask you for 23,000. They say the maximum you put away is a little higher. We give you 30,500. So it added the 7,500 right here, right? So it's kind of give you the age difference. So they added that one into the total. Now, and this one you are familiar with. So this is what? This is our W-2. I'm going to draw a W-2 on my drawing board. I want you to recall what your W-2 looks like. So this here is the state information. We leave that out for right now. This is the W-2. And then this box is our gross salary, right? So the total gross salary you are making. And then this box is for Social Security. This box is for Medicare, right? And then what is this box? This box is your income tax withheld by your employer, right? All right. So now we said that we want to save $23,000. So let's assume, I'm going to assume my gross salary, so this is one person, we're going to assume our gross salary for this person is $184,000. I'll tell you why I have this number, not any other number, but the calculation is the same. So you want to follow my thought to see what I'm doing. So my salary is $184,000. So that is how my Social Security benefit was calculated. That is how my Medicare benefit was calculated. But because I did $23,000 deferral, so my taxable income is $184,000 minus $23,000. So what is that getting me? That gets me $161,000 on taxable income. Am I right? So when I go home, give my W-2 to my spouse to have my spouse prepare for 1040 for our family, my W-2 is not $184,000. It's actually $161,000. I lowered my taxes right there. So if you were withheld for taxes on this 180 on this number, if you are withheld on this number, then that just means you're going to have a lot of refund coming out of here because you were withheld like $184,000 salary maker, but you deferred $23,000, so your income were lower. Then looks like you're just going to get a refund when you file your taxes because you don't need to pay that much. So that's not the end of it, because right now you just saw that your 401k plan had $23,000 in there in 2024. I'm not ending that conversation yet because this business is yours. So you decided to give yourself a 25% maximum times your gross salary. That gives what? That gives $46,000 additional amount. Where did this amount go, ladies and gentlemen? This amount gonna be combined with this amount. That gives you $69,000. So your company will reduce profit by this much because it's made maximum contribution to you. The company, 25% of your gross salary will come in to be putting into your account. So that 69 is sitting on your account, but sponsored by your company. Who says that running a business on your own is just always headache, is nothing beneficial? No, I think if you run your business really well and you will plan this for you, yourself, and when you run your business even better than normal, and then you would give the same benefit to all of the people who work in your company. That is the beauty of tax saving. Yes, we save a lot of taxes. Company don't need to pay. And if the company is an S corporation, you have the K1, what does that mean? Your K1 has a less amount for you to pay tax to. 69 went to your 401k account, company-sponsored 401k account. I pause right here for you to kind of digest. Now, did you understand what I mean by putting away $69,000 without looking for a receipt? And okay, you don't need to look for a receipt, but you do need to look for the person, the company, can open up the 401k account for you and it can establish the company account. Then you need your payroll folks to move the money out of your W-2 into the 401k account, right? It has to process through payroll because you still have to pay Social Security, Medicare on your gross salary. Don't run away from that because the only tax we're saving here is what? Is the income tax, folks. All right, so now let's repeat what we do, but this time we're gonna focus on the 50 years older and with $30,000 deferrals. Let's see how we can get into $76,500. That's the maximum for them. For the older folks, I shouldn't say for the older folks because I belong to the older folks. So we say the younger folks. Yeah, we definitely are younger because I work more hours than the young people who are working with me. So from the work hour standpoint, I'm younger than the older and than the younger one. So maybe I'm a toddler group, right? So greater than 50 years old, we're coming back to here. All right, and remember, and the deferrals were $30,000 because we are younger, so we're supposed to get $77,500 up, right? Now, what is my payroll looks like, ladies, gentlemen? Let's draw our payroll. And in this scenario, I still pay this old person or young person, and we're still gonna pay them for $184,000 because this is the magic number that gave me the maximum contribution. So now this is our W-2, right, folks? So I do the same, and this is Social Security, this is Medicare, and here is the state side. We're not worried about it, but you know that whatever you have in here, the state taxable income is the same. So when you reduce the federal, you reduce the states as well. So in here, we have 8400, 8400. So that's my gross salary. But because I contributed $30,500, so my taxable income is this. So if I really have paid too much taxes here, I would get a load of refund back because I am overpaying, withheld my taxes, right? So that is what my W-2 should look like. That's my W-2. All right. Now, let's see what I am going to do on the match side. So that's a 25% times the gross pay. That's what the IRS said that's how it is. We cannot do more than that. So that's 25%. Times 184,000. So someone gave me the number. Is that 46,000, right? 46K. All right. So in terms of the company, so the company will write a check. Company will write a check to my wealth division. So the wealth division is the one that helping me division as I own. That is what it's called in our firm for the wealth division. So you write that for 46,000, and then it got deposited to your 401k account. This is like from your right pocket to your left pocket, but your left pocket you don't pay taxes, no taxes in 2024. You know, you may say that, oh, Ying, what's the catch? I'm going to pay taxes. Eventually, So this is more like moving your money away from the time of your life where you make a lot of money. You know, in our life, just like business, you start, you grow, you expand, and you sell or you retire, right? So our income is actually work the same way. If you look at our income, generally speaking, you make little, more, and then you don't make it, right? So this is just a measure that what we can do is we can move your income out of your taxable bracket and to give you maximum deduction. So you're only gonna report taxes on 153,000 taxable income, and your company can increase expense, I guess. This is expense for the company. So the company has $46,000 expense related to you. Imagine if you got two, both of you are working and spouses or partners, and how much money we're talking about. In this case, we're talking about $76,500. Walk away without needing receipt. Just make sure you set up 401k account and you start contributing. Of course, if you want to do the other two, it's okay too, but the limit is less, right? So it's not as big as the 401k. So this is really the whole, in the nutshell, this is the whole thing we want to talk about today. So I want you to kind of remember what the W-2 look like, because when you set up 401k, if you don't do your payroll service with our firm, then you need to make sure that whoever you deal with, they understand how to do the deferrals. A lot of time, if things were not set up right, then your deferrals are not going away from your taxes. You still see your box. You still see this one to be $184,000. That would be really, really wrong. Please don't do that to yourself. And also, sometimes they set up wrong. So over here, it's got reduced too. That's also wrong. So your setup is that the taxable piece need to go down, but the rest of the pieces stay the same. And your taxable piece on the federal should equal to the state. So that's kind of your setup. Okay. With that said, I'll go back to my slides to show you the last two slides, folks. So this is where we have on our website, under the appointment button, you literally can click appointment button and get 45 minutes from us. And if you feel like, you don't know how to work your taxes, you have questions related to today's webinar, I welcome you to come to our website and book the appointment with us, with me, and with any of the partners, and we all understand that. And then, of course, our YouTube channel is where you get the knowledge. I encourage you to subscribe to our channel. If you have a good topic you want to talk about, you want us to talk about, email Catherine@communitycpa.com, and our website is there. And remember, we are the only CPA firm open 6 days a week. I'm still saying it until I find another one that opens 6 days a week, because I did not see. And I go onto AI website and ChatGPT and looking for any CPA firm open on Saturdays. It always came back with Community CPA's name on it. So I knew we are the only one open on Saturdays. And remember that, because we work like you. You work hard, we do too, and we want to help you as much as you want to help yourself, and we are very capable.